Have you noticed something strange happening in the housing market? Homeowners are pulling money out of their houses in record amounts, even though interest rates are still high. And when people start borrowing against their own homes just to survive, that's not just a red flag. It's usually the last warning sign before the crash. Stay with me because the numbers I'm about to show you are shocking, and they reveal exactly where this market is headed next. The strange shift. For years, refinancing made sense when rates were low. You'd refinance to get a cheaper mortgage and save money every month. But now, something completely different is happening. People are refinancing, not to save money, but to pull out cash. And here's the scary part. They're agreeing to higher interest rates and bigger payments just to get that money. Think about it. Would anyone voluntarily raise their mortgage by $600 a month unless they were desperate for cash? What it really means. This tells us something deeper. A lot of households are running out of options. Instead of refinancing to save, they're refinancing to survive, to pay down debt, to cover bills, to afford things they shouldn't be financing with home equity in the first place. It's like turning your home into an ATM. But unlike an ATM, this one charges you more every time you use it. And lenders, they love it. They don't care if you're drowning. As long as you sign, they're making money on the higher rates and the fees, the hidden risks. Here's why this is dangerous. If you can't pay off that bigger loan, you don't just lose money, you risk losing your home. Remember 2008? Millions of homeowners were underwater. They owed more than their house was worth. And once prices slipped, foreclosures exploded. Well, it's happening again, slowly. Over 500,000 Americans are already underwater today, and that number is growing. But refinancing is just one piece of the puzzle. Look at the bigger trends. Home prices are flat or falling in many parts of the country. Inventory is climbing back to pre-pandemic levels. Over a quarter of sellers are cutting prices because buyers just aren't biting. Pending home sales are dropping and contract cancellations are at record highs. This isn't the sign of a healthy market. It's the sign of a bubble deflating in slow motion. The uncomfortable truth. The truth is, the so-called housing shortage you hear about everywhere, it's not real. We actually have millions of vacant homes across the US. The problem isn't supply, it's affordability. Buyers simply can't pay the prices sellers want, and unless sellers adjust, homes will just sit or get pulled off the market only to come back later at a discount. So, what happens next? We're already seeing cracks, home equity shrinking in major markets, more families tapping their homes just to stay afloat, and buyers stepping back because the math simply doesn't work. If this continues, affordability will come back. But it won't be because wages went up or costs went down. It'll be because prices finally fall hard enough to meet reality. And if history repeats itself, we're looking at several years of declining home values, higher foreclosures, and yes, opportunities for buyers who've been waiting on the sidelines. So let me ask you, is this the beginning of another housing crash or just a temporary slowdown? Drop your thoughts in the comments. I read every one of them. And if you want to see the real data that most people ignore, hit that subscribe button because the more video I'm dropping will break down the one chart that predicts where home prices are heading next. Stay tuned because the housing market is about to change faster than anyone expects. Thanks for watching.